Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Wednesday. It's April 20th. It's 4:20. You pot smokers out there, how dare you? I'm just giving you guys a hard time. Anyway, the market's going to open up at in about an hour and 27 minutes. As you can see here, the Dow is up 97 points. The NASDAQ has turned around. It's actually positive. It was negative all night long. You may be asking why the NASDAQ was negative all day long, and I'll show you why. Because of this little rascal right here, Netflix. Netflix had some really nasty earnings. Not so bad in terms of the earnings, but future projections. And I told you that Netflix may be in for some trouble because they are not making, or they don't have as much of an original catalog. They are now dependent on foreign movies and original movies that are being dubbed, and they're losing market cap. Although they're talking about losing 2 million subscribers, but I think their subscriber base is like 80 or 90 million. So I think it may be a little bit of an overreaction. But remember, Netflix has a huge market cap. It's a big, big cap stock. It used to be a FANG stock. Nvidia replaced the market cap on Netflix. But boy, oh boy, look at this. 348, 253, down 27%. That is a reaction. And that's definitely forward looking, and we're going to have to keep an eye on that. But with that said, the market is rebounding pretty good. And I'm going to tell you, today is Wednesday, and usually on Wednesday I find you longs and shorts. And I hope this doesn't come to bite me in the ass like it always does. But it was actually harder to find shorts than usual today. I know that a lot of people are extra bearish. I know that there's a lot of talk about a market crash, but I'm not finding it took me 3 times as long to find a bearish play as it did to find a bullish play today. And usually I could find a bearish play just like that. So I'm just pointing that out. But the NASDAQ looks like it's opening up pretty good. We had housing starts and permits yesterday. Not a major report because the numbers have been so solid. We were looking to see if the number was going to turn down, and it did not. The numbers was actually fairly much in line with estimates. I don't remember exactly what the number was, but here it is, 1.793, right in line with estimates, a little better than estimates. Almost right in line, just a little higher. And that's a good sign because remember, interest rates are going higher. So the fact that people are still interested in buying homes and securing permits, or builders are starting homes and building permits, is a very good sign. Today we're going to have an interesting report. That's why I kind of got mixed up, because today we've got existing home sales and yesterday we had housing starts. Today we're going to find out if over the last few months, remember the Fed has been saying we're going to raise our rates 0.5 basis point instead of 1/4 basis point, which is quite a lot. We'll see if that has deterred existing home sales. I personally do not think it has, but as you could see, and the number has been really good lately. So usually when the number is really, really good, even if we're off just a little bit, it's not going to be a big factor. But as you could see here, month over month, the prior number was down 7% year over year. And I don't care about month over month. I care about year over year, negative 2.4%. It'll be very interesting to see if that number is down today or not. Consensus is fairly tight, I guess, 5.7 to 6.1. We're going to have that out in about 23 minutes, and that may set the tone for the market. Now, I warned you a few days ago that the bond market looked really, really oversold, and it bounced off yesterday really hard, and it's right now looking to open up about over a handle, which is significant. Now, if that's the case, and if we break up a little bit, and if we can break above this gray line here to the 125, 130 level, I am going to sell this thing. I've said this about 100 times, and I'm going to say it 101 times. We need to sell the bond because ultimately the bond market's going to go down, but because interest rates are going to go higher. But this is too much too fast. We need a pullback. I would say to the 130 level minimum. This is just all overreaction in my opinion. But even though it's an overreaction, when bonds go lower, interest rates go higher, which puts a wrinkle or puts a damper on tech stocks. Right now, with interest rates going lower, because bonds are going higher for at least the next couple of days, I'm hoping, it'll relieve some pressure on stocks like Netflix and other stocks that may have been going down because interest rates are, in fact, going higher. So whenever I'm pointing down here, remember, it's inverse relationship. Bonds lower, interest rates higher. So All of this downside has been reflected in the upside in the long bond. So again, in interest rates, in the yield. So again, remember, but I think this right here may be an overreaction, maybe even a little bit higher right here. I think that may be a little bit of an overreaction, and I think we're going to come up and then come down again, but that should relieve some pressure. Let's talk a little bit about global economy, and remember, the big report's coming out in about 21 minutes. By the time you get the video, it'll be out, but keep your eye on the existing home sales report, and then we've got some Fed speakers. The big report this week is going to be the manufacturing, Philadelphia manufacturing. Jobless claims has been really solid. Home sales have been solid. This is going to be the red flag right here, Philadelphia manufacturing. Let's talk a little bit about global economy here, because we've got a lot of things going on here, and you know that earnings and global economy is what's driving this market right now. Markets have powered higher even as the conflict in Ukraine has heated up in recent days. And I've shown studies, many studies, and I'll show you guys this study too in the next couple of days. Typically, volatility peaks when war begins. Russia was pounding. Russia was pounding, not being pounded, wishful thinking, pounding Ukrainian cities and towns and pouring more troops into the war as it pursues a fresh offense that seeks to slice the country in half. Health officials in Shanghai, we're moving now from Russia to Shanghai, just when you think things couldn't get worse, right? Major outbreak was under effective control. It's kind of odd because they said a week ago it was the biggest outbreak they've had, bigger than the first one. But now all of a sudden it's under control. In some parts of the city of 25 million, almost 12 million people have been allowed to go outdoors for the first round. The IMF cut its forecast for Chinese economy to 4.4% from last year's 8.1%. Ouch. And warned the global flow of industrial goods might be disrupted by zero COVID controls. I'm going to repeat that because this is big. Warned that global flow of industrial goods might be disrupted by zero COVID controls. Why have I been really bullish on industrial stocks lately? That confined residents of Shanghai and dozens of other cities for weeks. Remember, China is a big exporter. Also on Wednesday, the dollar remained at a 20-year high against the yen. Now we're moving on to Japan. We got Russia, China, now we're in Japan. The weaker yen reflects a divergence between rising rates in the U.S., where the Federal Reserve is seeking to tamp down inflation. They're doing the opposite in Japan, and we'll see who wins, right? Japan has reported that its trade deficit persisted in March as imports surged 31% thanks to soaring oil prices and a weakening yen. That's imports. What about exports, right? But Japan is not a huge, now that I'm thinking about it, cars, what else do we get from Japan? Not a big exporter. Investors are focusing on the current round of corporate reports, which I just talked about, with Netflix being down 27% before the opening bell. Oy, oy, oy. As more big cities release big companies, not cities, release their earnings. But these companies are as big as some cities, right? In terms of cash. Railroad giant CSX, that's a local Jack's company, will report earnings today along with Tesla. Hold on to your pants. American Airlines, Union Pacific will report on Thursday. National Association of Realtors is going to report same home sales. That's what the report that's coming out in 18 minutes. That's the report that I was talking about. Now, as I said, the markets are heating up pretty good, especially the NASDAQ in light of this Netflix report, which, again, this thing is going to open up down 27%. If you own Netflix, I am sorry. What can I tell you? Looking at sectors, looking at individual sectors, and I doubt that anything has changed because we haven't had anything changed in literally 4 months. We've had the energy leading and communication services lagging. By the way, Netflix is in the communication services. Oh, yeah. Now, as you can see here, on a cumulative basis, energy, utilities, consumer, material, all the stuff that should be up here. But on a monthly basis, things are starting to change a little bit. You've got energy, consumer staples, but consumer discretionary is coming up here. Don't rule this out. If consumer discretionary can start coming up a little more, it will cause the defensive stocks like consumer staples to come off a little bit. So keep your eye on that. With that said, consumer discretionary and technology are fragmented on a monthly basis, and on a cumulative basis, they are closer to each other. Industrial technology, not that far away from each other. But keep an eye right now on consumer discretionary. That's this sector right here. Going to see some big moves, and I'm expecting more upside. So we had a nice juicy move yesterday. If we can get to the 200-day moving average, which is at the 187.95, 188 level, let's just say, then there's a good chance we'll break above the 192 level and make new highs. There, I said it. On the technology, we're at the 150 level. We've got a lot more to go, but again, there's nothing here holding us till the 200-day, which is at the 158.35 level. In terms of the Dow Jones, the level we have to break, oh, I love this. I love this, love this, love this, folks. We're opening at the 200-day moving average. The next level is 354. If we break 354, then we've got 358 and then all-time highs. This is beauty. This is beautiful. So this is what I was worried about. Let me show you what I was worried about. Look at the QQQ. What I was worried about was that this line right here, this breakdown after we hit the 200-day line, was going to break down all the way down like the communication services index did. Again, look, see, it kind of went up and then started breaking down. But what we've been seeing, at least on the blue chip stocks, and I'll go to the Dow and to the S&P in a minute, we're at the 200-day line. This is very, very bullish. Very, very bullish. I was hoping we wouldn't break this, and we didn't. Looking at the SPY, it looks like we just started breaking it and then got a fool's breakdown. And again, we're right at the 200-day line. The level there is 448.60. So if we can break above there, we're looking good. And again, I had some trouble finding bearish place today. I hope that doesn't come and bite me in the butt, but the market's pretty bullish. Now, the war is continuing, and I'm going to be writing Lockheed Martin. I think the stock is a no-brainer right now. Even if it pulls back, I mean, it's going to be bullish during war and what we're going through right now. Defense spending is going to be big. We recommended this company back here at 330 and right here at 390. Now it's at 460, and I like it. I like it. I would be buying it right here at the 459, 460 level. I think, if anything, it'll congest between 457, 460, and 480. I like Lockheed Martin to the long side. To the short side, and again, it wasn't easy finding a short today. Synchrony Financial. This thing is overbought to the upside with the RSI. I think it's going to be coming down. I don't think it's got too much more upside left. It's been struggling, unlike most financial stocks. It made an all-time high in October of last year. It's been coming down, and I think we are the stock is outliving its welcome. I think it's going to start pulling back. The RSI hardly ever goes to 76. The last time the RSI went to that level, we were up here, and we went down, and the time before that, we went up here, and we went down, and the time before that, we were up here, and we went down. So I think we may be a little bit overdone on this stock. I would be selling it right now, and let's just see if there's liquidity for options. There may be some liquidity here. There's decent liquidity. Yeah, you can get this. You can get an option on this thing. There's plenty of liquidity. So again, SYF short, LMT long. Now, before I let you go, and boy, oh boy, earnings. We got Tesla reporting today after the close. We've had Netflix. We're going to have a lot of volatility. So even if investors could figure out today's insanely volatile market, there's still too many disadvantages to deal with. And it's no secret, Main Street traders are fighting an uphill battle against Wall Street's automatic trading machines. Folks, these supercomputers can execute thousands of trades in a matter of seconds, triggering massive stock runs before the average investor even has time to blink. Holy moly. Now, everyone has the opportunity to make the same lightning fast trades as the pros on Wall Street, all thanks to a trading algorithm that I developed. Follow the link below to watch this time-sensitive meat and potatoes presentation. No fluff, no Ferraris, no lifestyle videos. How to improve your trading. I'm giving away hot tips in this video. Follow the link below. You are going to love this video. Matter of fact, after you watch this, send me an email and tell me how valuable it was. Support@marketgeeks.com. I've been getting some really great emails lately. Let me know. I get up early to make these videos for you. Let me know if you enjoyed these videos. Follow the link below. And if you're watching on YouTube, you can go to the Wealth Press channel and follow the link in the descriptor. Have a great day, and I'll talk to you guys later. Keep your exposure low. Volatility is high, and it's going to ramp up. I mean, look at the VIX. Look at this thing. Yep, going back down to 20, just as I expected. Bye, guys. I'll see you later.